So I'm going to be taking you guys on startup finance. This is one of the most important aspects of business. How to prepare cash flow statement, how to prepare the income statement, the balance sheet, and also create your own business model and formula. I will lay emphasis on aspects that will benefit you guys more, and you guys will get the materials after the class. So, what is financial statement? Say financial statements are formal records of financial activities and position of every business and persons. So when you are doing your business, depending on which area you go to, or depending on the area you decide to specialize in, your financial statement is what helps you to keep records of the progress of your business. For you to say you are successful in your business, it means your financial record is up to date and you are able to checkmate your expenses and the inflows to know if you are making profit or not, because the sole purpose of every business or every organization is to what? To make profit. If you are not making profit, you are running a what? A charitable organization. Even charitable organizations these days, they make profit. So that is it. Even most NGOs, you see them running, going into activities that is outside their scope of operation just to meet up other financial demands. So imagine if the NGOs that are solely for charity are still venturing into profitable organizations. What about you guys that are in here to make the profit? So the whole essence of your organization, just as I said, is to make profit. And the only way you know if you make profit is when you have accurate records of your financial transactions. So ideally in every business organization, it is always advisable that at the beginning of every year, when I say at the beginning of every year, I'm not referring to January, and I'm not also referring to June. I might start my business in the month of June. What it simply means is that my financial year starts from what? June. And if you start your own business in the month of December, it means your financial year starts from when? So ideally, or for you for a financial year covers 12 months. So somebody that starts his or her business in the month of December automatically will have his 12 months completed in what month? In what? November. Yes, in November. So December to November makes what? A year, which means a financial year. So somebody that starts in June, his financial year will be when? May. And someone that starts in July will have his financial year to be when? June. So you must always have a financial year clearly stated. Your financial year must be clearly stated to say, this is the date I'm commencing my business. It's just that in Nigeria, some regulatory bodies like the tax and other CAC compliance rule always advise that all business should have its financial year to run from what? January to December. So what it simply means is that if peradventure you get to start your business in the month of June, you are expected to prepare what is called an abridged financial statement. What it means is that the financial statement is not complete, it's not up to 12 months. So it means the law requires you to prepare what is called an abridged financial statement to enable you get your compliance intact. What it means is, if you start in the month of June, you prepare a short financial statement that will cover from June to December, then after which you kickstart fully in the month of what? January. So that's basically what financial statement entails. So secondly, we talk about budget. So this is the financial plan of every business or persons for a defined period, often a year. Now, budget to me is the most important aspect of every business. I have a couple of friends I've had interactions with. I'll say, oh, they are looking for money to start business. And I'll ask them, how much do you need? They say they don't know yet. Then the question is, how would you want to venture into a business and you don't know how much you need? Truth be told, if you can get a clear definition of how much your business needs, you've solved 70% of your problem. Because there are so many investors that are out there waiting for you to come and convince them, and they throw their capital to you for you to start your business. So you should be able to know how much you need. So the processes of stating out or itemizing all the things you need to kickstart your business is what is known as budgeting. Then the document where this these estimates are being stated on is what is called budget. Is what is called what? Budget. So budget basically is a document that shows the estimate of what and what you intend to use your money for. So if I come to meet you and say, I want to start a business, me as a financial accountant, the first question I'll ask you is, how much budget are you looking at, or what is your what? Your budget. So if you are not able to give me a figure, if you go for your investors meeting or fundraising, the first thing they will ask you is, the expansion you are looking at, how much budget, how much would you need to carry out these expansion plans? How much would you need to kickstart your business? So each and every one of you here is supposed to have a clear idea of how much you need to start your business. When you have that, remember I say you've solved how many percent of your problem? 70%. So budget is very important. You could have a 1-year budget, you could have a 2 years budget. Some companies prepare 5 years budget. Sometimes you even go for interviews. For some of us that probably must have worked in 1 or 2 organizations, they will ask you, what is your 5 years what? What is your 5-year plan? Where do you see yourself in the next 5 years? That also applies to you. If you are starting your business today, where do you see your business in the next 5 years? If people are giving you money, remember, there are so many, we'll get to the aspect, there are so many components of capital. There are so many things that comprises what is called capital. Part of your capital is your own money and also the money given to you by investors. So for someone to want to invest in your company, the person should have full assurance that his or her money will be properly what? Managed and what? And what? Return on what? Investment. Of course, anybody giving you money, the reason why they are giving you money, unless your friends or family, even these days, I don't even borrow my friends money without interest. Because if I give you money to start business, I remember having a conversation with my wife, and she said she needs money to start a business. I said, no problem, I'll borrow you 1 million. She said, no, I should dash her. I said, no, if I dash you 1 million, you will not be serious, because you feel it's family money. You will be very reluctant. You'll be going to work by 10, coming back by 3. You can even turn your business arena to place for your visitors to be coming. I'm not even telling her that she will pay interest, but I'm telling you, if my friend walks up to me to ask for money to start business, you will pay with interest. Because when you know you are liable to pay somebody interest, that will make you sit up. That will give you sleepless nights. That will make you think, is it outside the box, or even carry the box on your head and be thinking. So the point is, until you have a clear definition of what you want, your motive towards business will still be on a shallow basis. So having a clear definition, remember, any idea you have must be written down. And if it has a financial implication, it will be written down on what? In the form of what? Budget. Now we talk about capital, just as I earlier said. It's a wealth. Capital is wealth in the form of money or other assets owned by a person or organization. It can also be defined as the funds available for the purpose such as starting a company or investing. Remember, I told you earlier that the money you use to start your business is called what? Capital. It's called what? Capital. So any money you decide, if you dip hands into your savings today to say, I want to start a business, and what I need to start the business is 2 million naira. You have 1 million naira from your side, and people are bringing in 1 million. The 2 million is referred to as what? Capital. But what happens in modern days is that people eat into their capital. That is what is happening. You have a business with 2 million naira capital. At the end of 6 months, instead of you to have a total of 3 million, that is capital plus what? Profit. You see people having 1.5. Meaning they have not only made loss, but they have eaten into what? The worst that could happen to any business is to operate on what? No. To operate on what? Deficit. No, not deficit. Equilibrium. Not to make profit and not to make what? Loss. Meaning your capital is what? Your capital is what? Meaning your capital is intact. Or the worst, to say you are into business, you are carrying out a business. Say market is bad, there is no business and anything. At least have your capital what? Intact. Remember, fundraising your investors will ask, or your potential investors will ask for your previous performance, which is in form of a what? Financial statement. If you do window dressing, you know the one they call window dressing?
No.
The one you make 1 million naira revenue, you show your investor that you make 2 million. You know Oyibo people, if after 10 years they discover it's still a problem, there is no escape route. So you should know who you are dealing with. Do you understand? You should know who you are what? Dealing with. Try to be as straight as what possible. Because some of the people that even helped you in window dressing this record are the same people that will expose you or even use it to blackmail you. So try and keep your records straight. There is a concept in accounting called entity concept. That concept simply means that every business should try as much as possible to create a clear cut between their personal activities and that of what? The business. That the business is a separate what? Entity. So if you are able to have this idea at the back of your mind that your business is like you are working for the business, at the end of the month, the same way you are paying your workers' salaries, you are also paying yourself allowance. You see that you grow. You bought goods worth 1 million naira. You sold it to the tune of how much? 2 million. So how much revenue have you made? 1 million, yes. So you expended 500,000, and these expenses cuts across salaries, wages, electricity, water bill, transportation, and all that. So tentatively, how much profit have you made? 500,000. Now the law requires that this 100,000 should be taken into what? Account by what? Accounting for what is called depreciation. So there are different owners and different investors to what? To business. Even as this organization, EP, VP, and all that, if you dig deep, you notice that it's not owned by one person. There are different people, and there are different categories of shares. Some are ordinary shareholders. Some are preference what? Shareholders. Some are even what? Holders of what? Options, warranties, and what? Maybe common stock and all that. So, as you go out there to do your business, don't always have the mindset that all the money must come from you. Give room for people to expand. When people are bringing money to invest in your organization, they are not bringing only the money. What else are they bringing? Ideas. What else? They will also refer people to what? Your business. Because the success of your business is also what? The only thing that gives them guarantee is when your business is what? Is doing fine. So they will do everything it takes. It's just like if you are working in a bank. Do you think you'll be working in Access Bank and they'll be paying you your salary to Zenith? So they will do all it takes to make sure that what? So that is it. So that is for capitalization table, or it's called cap table in short. So it is a table that shows the different ownership or the different component of what? Of your business. If you say, this business is worth 1 billion, somebody will now ask, who are the shareholders, or what are the composition of what? The 1 billion. That is where you talk about what? Founders, employees. Because some organization, there is a number of years an employee will put into the business, and they will invite the person to join what? To join as part of what? Shareholders. So they can issue you shares. They can issue shares to organization in form of appreciation. So we talked about options, warranty, preferred what? Investor. So all this warranty. Now is warrant, also called warranty. What it simply means is that there are certain type of stocks, right, that gives you an edge over others. You understand? If you have a warrant of a company, you could have an option to say, at the end of the period, if the company is not able to meet up with my obligation, you take part of the shares of the company to be a co-investor or a co-owner. So it's basically what gives you an edge to invest or to join an organization. If you are able to manage your finances very well, the sky will be your what? So that's the end of my class. Thank you.